My name is Hayden Sorbo,
My name is Michael Hahn.
and this is our financial analysis of AMD and NVIDIA. Who are our shareholders? AMD holds 1.01 billion shares outstanding, and the top 11 institutions own 9% of the company. NVIDIA has 606 million shares outstanding, with the top 11 institutions owning 1%. Why do investors care about our cost of capital? Cost of capital refers to the opportunity cost of making a specific investment. It is the rate of return that could have been earned by putting the same money into a different investment with equal risk. Cost of capital is the rate of return required to persuade the investor to make a given investment. The cost of capital aids investors in evaluating all investment opportunities. It does so by turning future cash flows into present value by keeping it discounted. And below we have the cost of debt equation.
What is our cost of debt financing? So in order to find that, we have to find our cost of debt pre-tax. For that, we have to find the default spread for AMD and NVIDIA. The default spread for AMD is 1.56%, and for NVIDIA is 0.75%. Then we have to find the U.S. Treasury rate, 10-year Treasury rate, which is 2.67%. Then we get our answer. We take that answer and we put it into the cost of debt after-tax equation, which we multiply by 1 minus the interest rate, and we get our cost of debt after tax.
What is our cost of equity financing? The capital asset pricing model can be used to find the cost of equity financing, which is here above. And we also ran a 5-year monthly return regression versus the S&P 500 to find our beta. For NVIDIA, our beta came out to 1.8394, and our beta for AMD came out to 3.3845, which is a riskier and higher beta than NVIDIA.
What is our overall cost of capital? So in order to find that, we have to find the WACC. For that, we have to find the equity ratio, debt ratio, cost of equity, and the cost of debt for AMD and NVIDIA. Then the equation goes cost of debt times debt ratio plus cost of equity times equity ratio. For AMD, we get 26.94%, and for NVIDIA, we get 16%.
Could we lower the cost of capital by changing our capital structure? And the answer is yes. For AMD, our weighted average cost of capital is 6.54%, and restructuring would turn our WACC to 5.96%. For NVIDIA, our current WACC is 6.71%, and after a capital structure, our new WACC would be 6.22%.
How would a financial restructuring affect the value of the company? So if AMD had a 40% debt to equity, our firm value would be $28,519,000,000. And then our net gain would be $4,293,000,000. For NVIDIA, if we had a 30% debt to equity, then our firm value would be $102,643,000,000. And then our net gain would be $12,527,000,000. Would more debt create unnecessary risks? Advanced Micro Devices and NVIDIA debt is currently far below the optimal debt. Although this is a good thing for these companies to have a lower debt than optimal debt, an increase would mean that the companies are expanding or growing in a sense. Therefore, since both companies have low debts, this means that both AMD and NVIDIA aren't really showing much growth as of right now.
What does the competition do? Above, we have AMD and NVIDIA versus their competitions, IBM and Analog Devices. The current assets of AMD and NVIDIA are very closely related, as well as their long-term assets. And IBM and Analog Devices are very closely related as well, in that their long-term assets are a majority of their total assets, and this is due to goodwill, which is mergers and acquisitions of smaller companies.
Is our stock price fairly valued? AMD's most recent closing stock value was $23.95 per share, which is equal to the value/share of the value derived from the analysis. NVIDIA's most recent closing stock price was $156.64, which equals the value/share of perceptual growth conducted in the analysis. Both companies' stock prices are accurate because the value per share for perpetual growth equals the value of the most recent closing stock prices. Thank you. That is our presentation.